mortgage broker, and I am. So I was in the police for 15 years, and my little sort of punchline, if you like, is I'll keep you and your property safe. So I was serving police officer on a career break currently, fraud investigation, compliance, regulation background, property investor with experience of commercial conversions, flips, buy-to-lets, service accommodation / holiday lets with a CMAP qualification. So about me. So as I've mentioned, I've been in police officer 15 years, and I was a landlord in 2018. I became an accidental landlord. I had no intention of becoming a landlord, a property investor at all, but the police went one way. I didn't like it. It wasn't. I'm passionate about policing, and it was really sad for me to see what it's becoming. So I had to either put up and shut up or leave, and I sort of opted with the latter. Whilst I was in the police, I did a commercial conversion in Harrogate. I converted an office into 3 apartments, and I've still got that block now. I've got buy-to-lets, the holiday lets too, and I've used bridging finance and refinanced as part of that deal. Property investments are about recycling your money through deals, and that's what I did there. Products wise, do whole of market mortgages, bridging finance, which is where I think I come into my own, and we do protection as well, critical illness, life insurance, and income protection. So I think your broker, accountant, solicitor, whomever you work with, should themselves invest in property. I think that when you invest yourself, you know the score really. You know why things matter. And to me, I had the unfortunate experience of a really bad broker on that commercial conversion deal. And to me, a bad broker is these 3 things. Someone who will get you onto a deal without caring how you get off it. So when you're getting into property investment, you always start with the end in mind. The asking price is irrelevant. How much will this property be worth at the end? How much are your costs? Knock your margin off. There's your asking price. Do that 10, 15, 20 times, numerous offers, and someone's going to accept. And that way you're recycling your money through deals. You refinance, you're pulling a significant chunk out and then going to your next. He never looked into that. For my clients, I do. The second one goes without saying, is just gets his fee and onto the next, and has zero integrity. And I vow to never be like that, because I've been on the wrong end of a broker who is that way. I joined the police. I like to help people. I generally see this job as the same. My other sort of one-liner is that I thought I worked with, after 15 years in the police, I thought I worked with criminals until I got into property, because there's a lot of good people, but there's a lot of bad people too. I don't have KPIs, I don't have any targets, anything like that. I actually pride myself on turning down bridging. If someone's deal, if I wouldn't buy a deal, I would tell my client, please either get 10, 15 grand off or just move away till you get a better one that works, because I will not be a party to someone getting in trouble in that way, So why work with me? I've got a police background, which is probably one of the most regulated industries in the country, I'd imagine. Probably everyone says that about their own industry, but I certainly feel that way. Very scrutinized. And the FCA regulation, you don't have to be regulated to be a bridging broker, deal with commercial limited company mortgages, but I am, which for me, again, I'm not saying every FCA regulated broker is good. I'm not saying anyone that's not is bad, but it does guarantee a certain amount of training and regular CPD, etc. This middle one and the one after are two sort of, they're linking together. I'll analyze your deals. I've literally got a spreadsheet that I will share my screen with you. If you come to me with a deal, I just need 3 numbers: purchase price, refurb, end value. And within 5 minutes, you can pretty much work out whether it's got legs or not. And I'll do that with my clients to make sure that they're being kept safe. And this bit here with time, if you're not in property, if you might be, I don't know, a counsellor or whatever job you do, you don't know what you don't know. I don't understand the importance of an accountant wanting XYZ by a certain date. Everybody knows what they know, but when it comes to property, if you get off a bridge on the Wednesday instead of the Tuesday, that could be a month's, that could be thousands of pounds, you know? And that urgency is lost on people, I think, anyways, who haven't been there. You know, I've been there myself with a bridge that's gone over in time, and thankfully I was okay. But you know, it's unless you've had that feeling and not that knot in your stomach, you don't know. And that knot in my stomach is fuel because I treat my clients' deals like they were my own in that sense. I don't want them to go through that experience. As it's touched on there, time is money, you know, repayment charges, things like that. Again, when you're recycling your money through a deal, a lot of people think you can't remortgage before 6 months. The key to a good property deal really is buying the property day one, you know, doing an 8-week refurb, 4 weeks into the refurb, I'll put the application in for the refinance, you know, sparkle clean on a Monday, so it's looking its best, value on a Tuesday, try and get the highest valuation that you can, refinance is 75-80%, pull that money out. There's no tax on that because it's a form of debt, and then recycle that into your next deal. And you need someone who works in that way, which is what I am. And you know, connection with BDMs at certain banks and stuff that I know work well. It just all fits in. And as I said, there refinances. So that commercial conversion I did, it could have ruined me, to be honest. But I managed to add about £165,000 value on top of the original GDV prediction that we had from the valuer, which kind of got me out of what would have been a massive hole. And that was down to I put some packs together from evaluation, which I got shown to do, and I share them with my clients to maximize their chances of avoiding a down valuation, you know. And this last bit's probably the most important bit for me, communication. It drives me insane, this culture that people have where it's okay to ignore an email or a WhatsApp or a call, you know, and, you know, reply 4 or 5 days, week later or whatever. That's just not me. I don't like it done to myself, and I don't do it to my clients, you know. Don't get me wrong, I've got a life, you know, don't call me at 11, but like if something's important to you, it's important to me too. It kind of is my approach really. And yeah, communication's key. So moving forward, so yeah, you know, to investors, I always say it'd be nice to be part of your team. You know, I don't have an ego. I'm not one of these people who, it's not beneath me to be asked a question or anything like that. You know, I'm more than happy to answer questions. I know a lot of people in property, and I'm happy to connect people. If I know the answer to something, I will help. If I don't, I'll be completely honest. I don't pretend to know everything because no one does. I couldn't think of anything more time wasting, to be honest, than knowing everything, you know. But if I don't know something, I will find someone for you that does. So just to summarize, I wear my heart on my sleeve. I'm a normal person. You know, it's the hardship that I went through really with that bad broker and that bad deal, ironically enough, is what brought me before you now. You know, I probably would be, you know, what's what 5 hours into 3 hours into an early shift at the police, if you know, in a job that I wasn't passionate about, if it wasn't for that hardship. So it's funny how these things work out. I've got a fire under me to make sure that nobody goes through what I did. You know, it just wouldn't happen under me because I'm quite not risk averse, but I'm a problem solver. I identify problems, come up with a contingency, and then you move forward. You either take a left or a right, but you know, you make a decision either way. And yeah, property can change your family's lives, your lives, and everything I do is for my family. And most people are similar. You know, they've got no one likes, you know, I don't like, I've got property. I don't like houses. You know, I don't go on holiday and look at roofs and windows. It's what property can give you, you know, that financial freedom, that ability to go part-time or spend more time with your kids, or, you know, go on that nice holiday or whatever. And if I ever see a client whose deal's gone well and I see on Facebook or what have you that they're in, you know, I don't know, in Florida with the kids, that is genuinely why I do what I do. So yeah, that's me. Thank you very much, everybody, for your time.
Thank you, Dan. Any questions for Dan? Russell,
On the
applauding.
question, I was just saying, well, thank you. Well done.
Nah,
Um,
my pleasure.
your
I could
your little tool, Dan, where you can sort of give an overview of the likely outcome of an investment scenario. Is that something that you offer as a freebie service, or does it only come for actual clients?
Yeah, anyone. I mean, I'll show you it now if you like. I mean, I don't know how boring this is for everyone, but yeah, this is it. I mean, I guess anyone that's got a deal they want to buy is a potential client, so it's not an issue. But look, I just need three figures. If you say, look, and for me, as you know, Colin, obviously I've spoke to quite a few people, and I think I notice in the police, everybody kind of says, "Oh, I'd like to get into property one day," and we're all business people, and we probably all have said that, but not many people do, because it is a scary thing. It is, but it's really not that difficult. There's people in here that deal with conflict resolution, accountants and all sorts. I wouldn't have a clue, and it's scary, but you don't know what you don't know. But it really is, say you've got a house. Everybody here lives on a street on a house. Everybody knows how much next door's worth. If you say to me, "Look, I want to buy next door," would be worth 300 grand because mine is. I go, right. I just need the end value. I'm thinking of paying 250 for it. Right. The refurb's going to be, I'm going to spend 35 grand on it. That is all I need. And the next bit and this is the most important bit, is this here, the profit. And once you've got all them numbers in, you just need the margin here to work. And normally you chip away a little bit, say at the solicitor's fee, that might be a bit high where you are. This here is for people selling a property. So we can take the estate agent fees out of there. Still not where it needs to be. You might say, look, we'll do a bit less on the refurb. I can do some of it myself. Right. Okay. A bit off there. Don't need a contingency. This needs to be at 15%. So the final bit is the purchase price needs to go down. Again, still not quite where it needs to be. So if you were a client, if this was a client of mine, I'd say, look, 14.2, 15 ideal, probably live with 42.5 grand profit, and then all you need to do is find about 10, 15 of these and they're just on Rightmove. I bought all mine on Rightmove. A flip I just did last year, I bought it on Hallowmore Drive in Harrogate. I bought it for 186. Spent about 25 on it, just sold it for 285, did one with similar numbers last year. And it really is not that difficult, it's just three numbers and numbers don't lie. And as I say, if you do that with 10, 15, 20 properties, you go with the ones that work and just move forward with zero emotion, So yeah, that's just a little stop sharing. That's just a little whistle stop. Probably boring everyone with numbers. Sorry, on a Friday morning.
That's really interesting, Dan, and your passion for what you do comes through so clearly, and I think that's the most important thing.
I think so. Yeah. Thanks, Colin. Yeah. I just want to help.
Any other questions for Dan before I stop recording?
I just had a quick question for Dan, if I may. So I hear a lot about, when you start starting out, we thought about it ourselves. And like you say, it is, you don't know what you don't know. It's not an area that we sort of, you buy a residential property and that's kind of it. But in terms of like structuring it, and if you wanted to invest, do you need to set up a company? How does that work? And what's your first step if you want to get into property investment?
Yeah, Vicky will probably have like an opinion on this as well from a tax point of view. But from my point of view, I would, and to be honest, I think accountants generally tend to ask the same thing. It's like most things, you just start with the end in mind. It's like, what do you want? If you want to buy 5, 10, 15, 20 properties, then I don't think anyone would say anything other than a limited company. If you wanted to buy 1 or 2, we're thinking of retiring, going part-time, your income's going to go down, etc. And I think years gone by, it was always loads of landlords bought properties in their own names, but the government brought in what they call Section 24 tax. And in a nutshell, that stops you from as freely deducting mortgage interest, which is a cost, from your profits. So you could have someone making £1,000 a month on a buy to let, and if their mortgage is 600 quid a month, that 600 quid cannot be deducted from there. So by the time you do deduct estate agent fees, X, Y, and Z insurance, some people can be loss making. But if you are a lower tax earner, then there are situations where it does make sense. And, you know, if you want to buy one or two, you know, your income's never going to be as that high. There are situations where it does make sense to do it in your own name. But either or is really quite simple. You go on Companies Made Simple or what have you, or get your accountant to set up a limited company. And from a mortgage point of view, when you work with someone like me, it's just, Stephen, I've got a question for you. You answer it, and we just do that until you get your offer. Do you know what I mean? It's not, yes, we'll need some paperwork, this, that, and the other, but it's not that difficult, even with a company. It just means you pay an accountant a bit more a month, and you know your interest's a bit higher and stuff, and nothing anyone semi-capable can't deal with, you know. But the key to property investment is, they call it that BRR model. You buy, you refurbish, you rent, you refinance. It's about recycling your money through deals. You know, on that spreadsheet there, if you're, and that recycling, again, it sounds complicated. Just think of it as a flip, but instead of selling it to somebody else to put a mortgage on it, you keep it and put a mortgage on it, you know? So instead of getting 100% of its value, you get 75%, but you're not paying tax on the profit, you know? So, and then you go again. I mean, the holy grail is what they call like a no money down deal, where you buy it with such a margin that your margin's actually higher than the deposit you're going to put down. So you can actually end up with the property, 25% of the equity and money back. But they are very, very, very borderline impossible to find, you know. But yeah, I can, you know, like I said, if somebody did want to get started, I know what I know what I don't know, and I know people that can help with the latter, you know.
Yeah, great. Thank you.
I think Chalky, you were next with your hand up.
Thank you very much, Dan. Yes, as an ex-property investor in Britain, because we sold all our property, all but one. I'm obviously connected with some people who have got property portfolios. But who else would you like to be connected to other than those who have existing portfolio holders?
Yeah, to be honest, Chalky, I think probably people who are portfolio landlords or that want to be, you know, anyone that's a business person that's perhaps got, like I say, we probably all said, obviously I have, you know, I quite like to get into property. Anyone that's asked themselves that before and never actually has, or has got like self-limiting doubts that they can't do it, you know, most people can. To be honest with you, the barrier that most people have got in their heads is, I can't touch the equity in my house. You know, that is the barrier. Most people are sat on a war chest. Most people could create financial freedom, in my opinion, with the equity in the house, you know, quite easily. And again, I'm not a tax specialist. I'm not in any way, shape or form, but for me, I hope to die with a mortgage. I couldn't think of anything more, because the tax man comes around and goes, oh, sorry, you know, half your house is on a first charge to NatWest. Oh, sorry about that. You can't touch it. Because 20 years ago, I put that into a load of stuff that is outside of my estate, you know. That's, yeah, you know, I do. I want to die with a mortgage, honestly. not too soon, but.
That's an interesting strap line to take away, I think, that one, Dan. Very good.
Yeah.
Peter, you've got your hand up.
I have. Thanks, Marlon. Thanks, Daniel. I think you, like Colin said, I think your passion for being great at what you do comes across really well. So thanks, first of all. Really interesting to hear what you do, mate.
Thank you.
I'm recently into the game of owning a couple of apartments that I'm renting out as well, and I'm sort of semi-toying with the idea of doing a kind of BRR model as well myself. I think what puts me off is I don't have the connections for all the kind of tradespeople that I would want to be able to help me do that refurb, and that's the bit that really is my sticking point. Do you have those kind of connections? Because some offer kind of whole kind of out of the box solutions to just sort it out? Well, I'm not necessarily saying I'm looking for that, but do you have those kind of connections in the field for that?
100%, mate. Yeah.
Yeah.
I didn't really mention before. So I'm based in Knaresborough. I've been in property properly, you know, about what 3-4 years. And there's 2 networking events I go to. Leeds Pin, which is where I met Ben Roberts, Colin, who introduced us. And I go to the property thing up in Darlington. And that is full of your proper professional property people. And you are right. There are people who offer the service you describe, but and I could probably spend hours talking about there's some absolute snakes that operate in that way. You know, you can go to a property course with no money, and the thing I've got to say to you is you need to package a deal and sell it to an investor. Well, I get the other week I had a client come to me and said, "Oh, I've got this deal from this investor from London, packager from London, to buy somewhere in Bootle in Liverpool." Which, I mean, I don't know Liverpool, but I know you got to be careful. And it was just an absolute. I said it was actually minus money. I said, "Look, if you're wanting somewhere to put $5,000, I'll just send you my bank details because that's what you're doing here." You know, you might as well. It was literally to the point where they were better off just buying it done up on a deposit. There was zero margin. But the reason I'm raising that is because that there are those horrendous ones, but there's some absolutely fantastic people that I know who are my clients, in fact, who are active in property themselves, do refurb properties. They've got a portfolio, you know, arm long, and they do it for other people. The sad thing is, and you probably get this in a lot of industries, they're too busy doing the actual work to go on social media and put themselves out to be, and then that's where these people sneak in, you know, because they've got nothing better to do than just, some of them, for me, just lie on social media, and then you can lose a lot of money, but with the right people, and for me, I don't align myself with any of them. My allegiance is to my clients. So whether a deal comes from someone I've introduced or a property you found or whatever, that spreadsheet doesn't lie, you know.
Totally.
So it can be that, you know, it's like anything, like, you know, there's a problem, you come up with a solution and you go one way or the other, you know, and nothing that can't be sorted. Most questions like that, most people in property, I know a lot of people, you know, or know of, should I say. So
yeah, brilliant. Cheers, Daniel. Thanks for that, mate.
Yeah, no worries.
Great stuff. Thank you very much, Dan. Oh, we've got Julian now. Julian.
So, Dan, great presentation. Obviously, as everybody said, you know, really feel, you know, your passion and care and attention to detail for the work you do personally, and obviously for the support you provide for clients. So that's, you know, brilliant to see. I wanted to get your crystal ball out for me if you can. So Renters' Right Act that's come in. What do you see the impact of that on the market? Opportunities, challenges? How do you see that playing out?
Honestly, like I funny enough, I was at Leeds Pin chatting to someone about this. So opportunities, I think there are going to be opportunities because a lot of landlords are exiting the market. I think it's just a final straw for a lot of people. But so I think there's going to be a lot more rental stock on the market. And I think professional investors, people new to property that work in the way that I'm describing, are going to clean up, you know, and are going to be able to buy with a good margin, a good potential to add value, to then recycle the funds through onto the next and the next and the next. But in terms of challenges of renters' rights, honestly, and I don't mean to sound flippant with it, but I just think it's complete hot air, like the sort of furore around it, because really the thing that most people are saying, the renters' rights, the biggest problem with it is the removal of the right to evict someone for no reason. That's the main thing that people grip onto when they say, "Oh, I'm getting out." Well, but then if you put that down into like, and there's more rights, you know, for tenants. Well, so there's two problems there really. And I guess the thing is, how do you solve them? Number one, removing someone for no reason, for no fault evictions. Well, my question really is, why would you remove someone for no reason? The only thing I can think that stops people from doing now is taking their property and putting it as a holiday let instead of a buy to let. that ship has sailed now, I guess, for anyone. But if someone doesn't pay the rent, you can still evict them. There's still that avenue is still there. If someone breaks the terms of the contract, that's still enforceable. So that part, I think, is really a non-issue. And as for there being more, and I do think tenants have got too many rights. You know, I think, Christ, if you rent a car or something and don't pay, you know, let's see what happens, see how well that goes for you after a month or two. You know, with property, it's, in my opinion, that is wrong. But again, what's the solution? Well, I know an insurance broker who, it's Jeremy Collin, you know, you spoke with before, and he sponsors an event up in the Northeast. And he said, look, I'll find you an insurance policy where, as long as your AST is done correctly, which, let's be honest, you just go to an agent and they do it correctly, then I think the insurance policy was, off the top of my head, about 20 quid a month. And if the tenant doesn't pay, it's not none of this, oh, we recover your costs. No. The month they don't pay, 2 months later, covered until they're either out or they start paying again. So, you know, they're the challenges. That's the opportunity. That's the challenges. And kind of that's the solution to it, you know. And I mean, rent's gone up so much, hasn't it, in the last sort of few years? I think we can all afford 20 quid a month to sleep better, you know.